All right, good afternoon.
Good afternoon, sir.
Yeah. How did you practice the last topic?
Yeah, the last topic was candles stick patterns. I went through uh, some pairs, checking on railroad track and
Yeah.
engulfing patterns,
Okay.
on different time frames.
No. When we did it, did we check it on different time frame?
Oh, what I was just, we did time frame analysis. So as I checked it, I said, okay, let me practicalize it with time frame.
No, that is
Okay.
wrong.
Okay, sir.
I told you I don't look for candlesticks structure in a lower time frame. And I specifically told you that it makes no sense to be looking for engulfing candlestick or railroad track in 1 hour or 15 minutes. Nonsense. Where is important is higher time frame. It's daily and weekly. You can be looking for candlestick pattern. That's where a true sell pressure will come. If you see an engulfing candlestick pattern on a daily time frame, you know that the market will surely push to the downside. You will know it will surely push to the downside. But if you are seeing an engulfing candlestick in 1 hour, 15 minutes, it may push, it may not push. Because what is happening there, the engulfing that is happening there is not a true reflection of the market. All right.
Okay, sir.
So don't check engulfing candlestick pattern in any time frame less than daily. Weekly and daily engulfing, that confirms your direction. Then come back to lower time frame where you look for impulse and correction before you enter a trade.
Okay, sir.
Do you understand now?
Yes, I understand.
Okay, so which other thing did you check? Which other thing did you do?
I kept on practicing the time frame analysis, sir.
Okay.
Because that was the first thing we did. Time frame analysis. Candlestick pattern.
And so the what I want you to do is that, for instance, let's say you have in my signal channel, we are currently trading card CHF. Okay. Now you see that this is an ending structure, right?
Yes.
I think I told you what an ending structure is. Have I told you what an ending structure is? Have I told you what an ending structure is?
So you mentioned it on the
Okay, if I have not told you, now listen to it. This is an ending structure. What do you see that? You see an impulse like this. The market is no, let's clear it. Let's start afresh. You see a market is coming down, coming down, coming down. On getting here, it's now giving something like this.
Yes, sir.
This structure here is what is called an ending structure. And if you check the divergence, later we'll still do divergence. We have not done it now.
Not yet.
You see, if you check the divergence, you see this one will be making a higher high, a higher low here, and this one is making a lower low here. So that's what is called an ending structure. And every ending structure that have this characteristic must break up. Do you understand now?
Yes, sir.
Okay. So if in a daily time frame, we are now seeing an ending structure like this, coming this way, and then at the bottom of it, we now see this engulfing candlestick pattern. Is this not engulfing?
It is, sir.
Correct. So if this is an engulfing candlestick pattern, then we know that this move to the upside is going to come. Then we can now come to daily 1 hour time frame. If we see engulfing on daily, what are we looking for on 1 hour?
We are looking for impulse and correction.
Correct. Is that not, did I tell you that we look for engulfing on 1 hour before? Did I tell you? So we are looking for impulse. Look at the impulse. Then look at the correction. Look at the correction. What are you expecting? A move to the upside. Hence, we are buying CAD CHF right now. So every time frame has what you are looking for in it. In a weekly, in daily, you are looking for the structure and the direction on the market. Direction of the market based on where the market is. Is it at resistance? Is it at support? What type of structure are you seeing? And if it is at support, do you see engulfing candlestick pattern there? If it's at resistance, do you see bearish engulfing there? So if it is yes, then that's when you can now proceed to lower time frame to look for impulse and correction for your entry. Is that okay now?
Yes, sir.
Correct. So that's it. So what are we supposed to learn today?
Okay, the next topic is supposed to be market structure.
Market structure.
Yes, sir.
Okay. Let's put this one aside. When you talk of market structure, when you have a market structure, can either be an uptrend structure, a downtrend structure, or a consolidation structure. Okay? So when market is an uptrend, it makes a high, a lower high, a higher low rather, a higher high, a higher low, a higher high, a higher low, just like that. This is an uptrend. When the market is the downtrend, it makes a low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, right? Then in between them, you have consolidation, the market ranging, ranging. Can you see? So
yes,
market
sir.
can be any of these three structures. But when you get to the market, it is not as simple as I have drawn it. Okay? It's not as simple, it's not a straight line as I have drawn it. Okay? But at any case, the application of Fibonacci has helped us to get into the market at the right spot. If you have a swing from here to this level, okay, there is no way you get a retracement to this level and you want to buy, to this level and you want to buy. Will you want to buy?
No.
Because it has not made enough discount for you to buy. But if you come to around this level now, you'll be looking for buy opportunity. Is that not? Is that not?
Yes, there is a discount.
Yeah, that's not that there is a discount. There is enough discount. Because if you move from here to here, it's still a discount now.
Okay.
From here to here, if you move from here to here, is it not a discount?
It is, sir.
But is it enough?
It's not enough.
Correct. That's what we are saying. Okay. So the discount is not enough. You want enough discount before the market will move to the upside. Do you understand? So you see,
yes, sir.
This is a ceiling. This is a floor. Is that okay? This is another ceiling. This is another floor. This is another ceiling. This is another floor. So a ceiling is the same thing as resistance. A ceiling here is the same thing as resistance. Okay? And a floor here is the same thing as support. Okay? So you have ceiling, resistance, floor, support. Ceiling, resistance, floor, support. Ceiling, resistance, floor, support. Is that okay now?
Yes, sir.
Correct. So the same thing is applicable to this one. This is ceiling or resistance, floor or support. Ceiling or resistance, floor or support. Ceiling or resistance, floor or support. Is that okay now?
Yes, sir.
Then in the ranging market, ceiling, 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 floor, 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 floor. Do you get now? This is the
Yes, sir.
preamble of market structure. This is the preamble of market structure. I told you the other time that it is not as simple as we have drawn it to be. It's not that simple. But I will tell you what you do. When you get to the market, how do you recognize this impulse? How do you recognize this correction? This correction can come like this. 1, 1, 2, 3, boom. Can you see? Can you see?
Sir.
That thing I drew as a straight line, I have changed it to another form now. Do you understand?
Yes, sir.
But we are not going to spend much in market structure before we enter ELLIOTT wave theory. Because if I'm teaching you market structure here and I do not teach you ELLIOTT wave theory, you are going to be dancing around a circle. It is the ELLIOTT wave theory that will give you a better perspective of what market structure is all about. I don't know if you understand what I'm saying now.
Okay, sir.
Is ELLIOTT wave theory, because there is no way I will teach you market structure that you don't need a proper understanding of this corrective structure. And then it's only ELLIOTT wave theory that gives a proper perspective of how to identify this corrective structure. Is that okay now?
Okay, sir.
So now I know the reason why I put market structure in your curriculum. It is to help you later when it comes to issue of entry. It is to help you. That's why I put it. I will tell you when I get to that level. Now, people used to say that when in an uptrend, when a resistance is broken, they say it turns to support. Have you heard that before?
I've heard it.
Okay. It's not every time that it turns to support. What do I say? It is not every time that it turns to support. If it turns to support at any time, now lock. Okay? It's not every time. There are ways and guidelines by which we determine where the market is going to come to. And one of the ways is by using fib and the nature of corrective structure. We use fib and nature of corrective structure. If corrective structure that we are getting here, for instance, this level here,
yes, sir.
If it's a zigzag, for instance, by the time it does a zigzag, will it not come to this level?
Yes.
Has it not passed the breaking structure? Has it not passed it to the downside?
It does.
You can see that break of structure has never turned to resistance now. Break of resistance has never turned to support. It broke the support. Because the nature of this corrective structure is a zigzag that necessitated it to move to the downside.
Sure.
You are confused. Are you confused?
I'm confused, sir.
Okay,
because
wait.
By labeling.
Don't label anything. No need for labeling here. Look at it. You have impulse, Abi.
Yes.
You have correction.
Yes,
you have impulse, Abi.
Yes, sir.
They are now telling us that this break of structure, break of this resistance, will make this one to turn to support before it will go up. Abi? The question I'm now asking is that, what of if this one now make a zigzag corrective structure and end here? This is the resistance.
It has broken structure.
Correct. Yeah. This resistance, and then where this place, all those people that believe in breaking resistance, turn support, they want to buy here. They put their stop loss here. Will it not hit it?
It will hit.
So, and I'm not telling you that what determines the retracement level is the nature of the corrective structure. What is the nature of the corrective structure? If the corrective structure is zigzag, support resistance will not turn to support. It will break it because this one necessitates that it come to the downside very well. Victor, I don't know if you understand this thing now.
Yeah, I'm getting you, sir.
So
yes,
I am now telling you that people say break in resistance will turn to support. The essence of the mentorship you paid for is for you to know that people that talk like that, they are talking based on conventional knowledge of the market.
Knowledge, okay.
I'm telling you that the knowledge are so much improved that you don't think like them again. They can be thinking like that, but you as a person never think like that. How can you tell me when a resistance is broken, it will turn to support? It may not turn to exactly support. That support may be broken. And the fact that it's broken does not mean that it will not continue to the upside. But if you don't know the nature of this corrective structure, you will think that you have to correct, the market has to correct here and come down. Whereas this is a complete corrective structure that should go up.
Go up, yes.
Do you understand me now?
Yes, sir. Yes.
This is the reason why I'm telling you that there is no way I can teach you market structure without teaching you Elliott wave theory, because the real structure of the market is in Elliott wave theory, not in trend line and all those things. Are you okay now?
Yes, sir. So we can now go to Elliott.
We are going to next time we meet, we are going to Elliott wave theory, but there is something I have to teach you here first. It's not now we are going to Elliott wave theory. I have to teach you something first. Okay.
Okay.
Now,
all right, sir.
Now look at this thing. Look at the trend, up, down, up, down, up, down, up. Okay. Oh, okay, sorry. Yes. Now, if this is let's say 4 hours time frame.
Yes, sir.
Let's say this is 4 hours time frame. Do you know that this one in itself, there will be a trend there? Because an impulse. Is that correct? Is that correct? Is that correct? If you don't know, just tell me I don't know.
I don't understand.
All right. Now, look at this move. Do you see this move?
Yes, I've seen it.
Okay, if I go to 15 minutes time frame, if I go to 15 minutes time frame,
okay,
this move in itself, now this one that I make just one wave to the upside, don't you see some other waves there?
Yes. Waves inside waves.
Yes. Can you see it now?
I understand now.
That's what I'm talking about. That if you see a wave like this, all right, within that wave, you will see some other waves.
Oh, other waves, yeah.
Yes. Then this one that is coming down, you will see some other waves like this. Is that okay?
Yes,
then this one that is going up, you will see some other wave like this.
Yes, sir.
This one coming down, you see some other wave like this. This one going up, you see some other wave like this. Is that okay now?
Yes, sir.
So now, what I want to tell you now is what is called break of internal structure. Break of internal structure. It's very important you know this because you are going to use it when we come to entry. Now, look at it. If you have a market going up, going up, going up, going up, going up, going up, if you have it like this, what has happened? This move down has broken this structure. Is that not?
Yes, that's correct.
And it's a sign that this market want to correct. So when you have this, you have this. And at the end, it's now making something like this. End of structure. If you now make this, what does it tell you? If you now see this impulse, what does it tell you? If you make that impulse, what does it tell you? What information is it giving you?
There it has corrected the correction.
This move to the upside, what does it tell you?
Okay, it has broken the structure, sir.
Correct. Now look at it. This is the main trend. This is the main wave, Abby.
Yes, sir.
This is the corrective wave, Abby.
Yes, sir.
Then this corrective wave that is coming down, a market just move up to break the structure.
Yes,
so
sir.
You see that this wave, one wave that is going up is the external structure. So this is the external structure here. This is the external structure, impulse correction. Is that okay?
Yes, sir.
But this one that is proceeding to the upside, 1, 2, 3, 4, 5, 6, 7, break of structure. This is what is called break of internal structure.
Internal structure. Okay.
Do you understand?
Wow.
And look at this one again. 1, 2, 3, 4. Just like this, like this, like this, like this. Boom. Does it not break the structure?
It does.
This is what is called break of internal structure.
Internal structure.
Yes, when it now correct to 5061.8, you get your entry here.
Okay.
So the idea of this, do you understand this break of internal structure now?
I'm not getting it 100%, sir.
This break of
I'm
internal
still
structure,
a little bit confused.
This break of internal structure is what we use for entry. There's nothing to be confused about. I have explained to you first and foremost that you can have a bigger structure like this. You have a correction for a move up. And I told you within this bigger structure, if you go to lower time frame, you will see the trend there. The trend making a higher high, higher low. But anytime this trend break this structure here, it means that you are about to do correction. You now expect a pullback, a breakdown. And then if you are going small, anytime you finish and you see one break the structure, you know that you are looking for correction for upside. So I'm saying this break of structure that you are seeing on a lower time frame is break of internal structure. And that is what we use for entry. So if internal structure has not broken, you can't enter. For instance, look at this one now. Let's replicate what happened here. Let's replicate it with what we see here now. Correction, 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 correction. You can't enter now.
Okay.
Why is it that you can't enter? Because there is no break of internal structure. Look at it. This place can still turn to resistance and go down. Am I lying?
Yeah, correct, sir.
But if it's coming like this and you break it like this, what happened? You have broken internal structure.
The internal structure.
Yes, and you are looking for what? Correction. Back to this level and then buy.
And go back.
It is the break of internal structure that will confirm to you that your buy is ready or is not ready. I don't know if you understand what I'm saying now. Yeah,
it's understood now, sir.
So now, that is what I want you to understand, because that is that is the strategy we'll be using for our entry. If we want to enter the market, we use break of internal structure, to be able to enter. I don't know if you understand what I'm saying.
I'm getting you, sir.
Yeah, that's what we use. So, and that is the essence of teaching you market structure. You must understand how internal structure breaks and how it has to come back, not retest in this case. It has to come back to fib, the right fib level for you to take a buy to the upside or to the downside. Is that okay now?
Yes, sir.
I think I have an example with USD card, a trade I took sometimes ago.
Okay, sir.
Look at this. Do you see this? This is end of structure. End of structure. I describe end of structure for you when you have impulse and you have this structure. This end of end of structure. Do you understand? So
Okay,
what happened
sir.
here? This structure was broken. Okay. And what did I
Yes,
do?
sir.
I allow a pullback to 50% and I bought. Look at what I made. I don't know if you get the gist.
Yeah, I'm getting it, sir.
Correct. That's how you implement change of structure, especially at the end of structure. When a structure is nearly to an end, it will give you a slow move like this, a slow move. Whenever I see this pattern in the market, just check it. Does it have a divergence? Yes. Let one pull up like this. As soon as it break this last resistance, let it correct back to 61.8. Take your buy to the upside. The same thing for sell. If the market is like this, you see there is divergence, let it break down and break the structure. Correction to 61.8, sell. Is that okay now?
Sir. Yes, sir, it's okay.
Is there anything you don't understand from what I've just taught you?
No, it's okay. I understand, sir.
If there's anything you don't understand, let me know it now. Because I will give you assignment now. Assignment that you will not be able to sleep. Is that assignment you'll be doing till daybreak? I will be very soon now. I will be giving you crazy assignments.
Okay, sir.
Is there anything you don't understand now?
No, sir.
Okay. Now, if we go to the chart now.
Yes, sir.
We go to daily time frame. Let it load. Okay. If you see the market structure schematic that we did, this is a move, this is a correction. This is because this one did not break the structure. So this is a move, has broken this structure. This is a correction. This is a move. Can you see that this pair is trending? It's really trending. Is that okay? So now, hello, are you still there?
I'm here. I'm listening, sir.
Resistance, support, resistance, support, resistance, support. Does it correspond with what we just did?
Yes, sir.
Now, now when you look at within the external structure from here, from here to here, I think we can spot internal structure, right? Boom,
yes.
Boom, 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 boom. Abi?
Yes, sir.
This one, you can spot internal structure. Boom, 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 boom. Ranging market, ranging market, ranging market. This is a ranging market in the middle. And then boom, to the upside. So now, what I'm telling you in essence is this. If this market is like this, you can't get in on a lower time frame. You can't get in for a sell until you cross this place to the upside, until you cross this level to the upside, because this is the last resistance. Abi? And that resistance is taken to the upside. And what are you supposed to look for after the resistance is taken? Hello? Hello?
After the resistance is taken,
What are you supposed to look for?
You're supposed to take a FIP.
This level is taken. Look for correction back to the upside. Is that okay now? Is that okay now?
It's becoming complex, sir.
Child. Okay, tell me what you don't understand here.
What I don't really understand is the structure itself, the way you are putting the drawing.
Okay. what I want you to do, but you understand the internal structure.
Yes, sir.
And you understand when we say break of internal structure.
Well, when we are doing it schematically, it's okay. But when we come to the charts, I get
just
confused.
hold on. Do you understand break of internal structure?
Yes, sir. Yes, sir.
Okay. Everything is looking confusing to you because you do not understand Elliott wave theory. All right. So what I'm going to do is that now go and practicalize, go to 1 hour time frame. Go and be looking for ending structure. When I say ending structure, let me show you ending structure. When you are going up, correction, up, correction, when you now get here, and you are not making big up again. Okay? This is called an ending structure. Okay? And every ending structure like this one must break down like this. When it breaks down, it has broken this internal structure. Correction, this is your trade. Identify this pattern, number 1. Identify this pattern. It's coming down, coming down, coming down. Can you see? This is end of structure. All you are looking for is bless. You want a break of structure? Where is the structure that is broken? This one, this resistance. And yes, after it's broken, it has to retest or pull back, and then you have upside again. Go and start identifying this pattern and how they break up or break down, pull back for you to buy or to sell. Go and give me this identification. Can you identify these two structures in the chart? Hello?
Yes, sir.
Can you identify these two structures in the chart?
That is just the difficulty, the challenge I have. I might understand the drawing, but when we get to the chart, it becomes difficult for me.
What I do for you now?
Okay, sir.
What I do for you now? Is it different from this one? Is a pair, you see a pair is slanting down. Is it different from what you see here? Is it different? Then here, break of structure already. You are looking for pullback and go. Is it different? Is there any different?
Not different. It's similar thing.
So I don't know. It's not difficult, but you want to make it to look difficult now, and it's not difficult. I'm looking for another example. Look at this one. Up, down, up, down, up, down. This is an ending structure, and every ending structure must break down. Can you see? It broke down.
Yeah, it broke
correction,
down.
Break down again. This is the foundation of trend that I'm teaching you. Are you okay now?
Okay,
so,
sir. Yes.
What we are going to do is simple. Because I see that there's no way I will teach you this structure without teaching you Elliott wave theory. And so that by the time I teach you Elliott wave theory, you'll be able to identify that this is an impulse. You'll be able to understand that this is a correction. This is another impulse. This is another correction. This is another impulse. You'll be able to identify a pattern like this. And not only identifying them, you'll be able to say this is an impulse. This is a correction in 3 waves, 1, 2, and 3. 1, 2, and 3. And after another 1, 2, and 3, which is correction, you need another impulse. Okay, it is Elliott wave theory that will give you this understanding. So let me leave it this way. We start Elliott wave theory, but before we start Elliott wave theory, you must go and practice internal structure. Internal structure. Is that correct?
Yes, sir. Yeah.
Go and practice internal structure. Make sure you understand internal structure, because There is no way we can learn entry techniques without internal structure. It's not just possible. Okay? It's not just possible. So go and watch the video again and go back to the chart.
Okay.
Practice break of internal structure. You cannot just be drawing it on the plain paper alone without practicalizing it. What you are able to draw on a plain paper, what is difficult in it, in translating it to the chart? If they teach you that on a plain paper, you see impulse like this, correction will come like this, and like this. If you see chart, you cannot carry this thing. You cannot carry this thing and carry it on the chart. It's not difficult now to be able to carry it and say, okay, even if you don't know it, you see that, oh, they say there is a big move up. Where is the big move up? This is the big move up. They say there is big move down. Where's the big move down? You say, okay, is this one, 1, 2, and 3. So where's the next thing? The next thing is to move to the upside. Then you see it right in the chart. You determine the fib level here. You say, okay, since it's zigzag, it's going to come to 78. You are waiting for it here. Honestly, it's as simple as ABC. All right. But gradually, you get there. It's not difficult at all.
Amen.
It's not difficult at all. Don't make it look like it's difficult. It's not difficult. Okay? So, but first and foremost, go and learn break of internal structure. Do you understand that one?
Yeah, break of internal structure.
Do you understand that one?
The break of internal structure, I also practice it.
Go and practice it. And then we'll meet on when? On, is Friday. Your own Thursday or Friday?
No, mine is Friday.
Friday. We'll
mine is
Friday.
Mondays and Friday.
Okay. We'll meet on Friday. But go and practice this. You know how to send whatever you practice. You know how to send it to me?
Yes, sir.
Please. Anyone you need to send to me, let me see. Okay?
Okay.
For instance, now, look at if this candle closes now. If this candle closes now, assuming market has closed today, that you want to enter tomorrow, another daily candle is forming. Is this not an engulfing candlestick pattern?
It is. That is a bearish engulfing.
That is what I asked you to identify. Now, we now have confirmation that we are going down. So if the market closes like this, daily candle closes like this, then tomorrow you can go to 1 hour time frame and look for pullback. So all this will be the impulse. We now look for pullback, and then we enter our trade here. Simple, guys. Victor, is life not made easy like this? Eh?
It is, sir.
It is. It is. Please go and master it. You must know it too. I don't want any excuse. Right?
Okay.
No excuse. Go and learn. Go and learn it. Okay?
Okay,
so,
sir.
We'll see you. I see you on Friday.
Okay, sir.
All right. Bye-bye.
Thank you, sir.
Yeah.
Please send the record, sir.
Okay.